Welcome back to Talk Tickers, where we break down these earnings calls so you don't have to.
Oh, got it.
And today we're diving deep into Constellation Brands,
All right.
the powerhouse behind some of your favorite drinks. Think Corona, Modelo, Pacifico.
Yep.
They just released their Q3 earnings for fiscal year 2025. And, well, let's just say it's a bit of a roller coaster ride.
Yeah, it is, isn't it? The stock took a major hit today, down a whopping 17%. But here's the twist. Their free cash flow is looking pretty darn healthy.
Yeah.
So what's the deal?
Yeah. What's the deal? Are we looking at short-term turbulence or choppy waters ahead for the entire alcohol industry?
Yeah, that's the question, right?
That's what we're going to untangle today. We'll unpack their performance, dissect those numbers, and see if we can spot any red flags, or maybe even a hidden treasure chest.
Yeah, we'll dig into whether these bumps in the road are just the economy being, well, the economy, or if there are bigger shifts happening in how people are drinking.
Right. Okay, so first things first, a little background. Constellation Brands is a Fortune 500 company, the big kahuna of beer importers in the U.S.
Mm-hmm.
So when they make a move, everyone in the beverage industry pays attention.
They're definitely a bellwether for the sector.
Mm.
Their size and influence make these earnings calls must-listen events for anyone following consumer trends.
Let's start with their bread and butter, the beer business.
Okay.
The good news is they're still outperforming the overall beverage alcohol industry.
Right.
People are still grabbing those Coronas and Modelos, with demand picking up in Q3, leading to a slight bump in what's called depletion growth, basically how fast their products are flying off the shelves.
Now, you might be wondering what depletion growth means. It's an industry term for how quickly products are selling through to consumers.
Okay.
So a rise in depletion growth means their beers are becoming even more popular.
Interesting. It's like a pulse check on consumer demand. So even with inflation and everything, people are still finding room in their budgets for a cold one.
It seems so.
Bam.
And their net sales and operating income for the beer segment both saw modest growth, 3% and 2% respectively,
Okay.
which isn't too shabby in this economic climate.
Not bad.
No.
There were a couple of snags, though. Their shipments actually lagged behind that depletion growth. They had some planned maintenance at their breweries, which can really throw a wrench in things.
Absolutely. Brewery maintenance is crucial, but it can cause temporary hiccups in production.
Yeah.
Think of it like a pit stop during a race. You need to slow down to make sure the engine's running smoothly for the long haul.
Okay, so that makes sense. It's a short-term pain for long-term gain.
Right.
But let's talk specifics.
Okay.
When I hear Constellation Brands,
Yeah.
I instantly think of Modelo Especial.
Sure.
What's the story there?
Modelo Especial is still the undisputed champion, the top share gainer in the U.S. market.
Wow.
Depletions are up over 3%, and here's the kicker. They have a ton of room to grow.
Really? I feel like I see Modelo everywhere already.
They're doing great, but their awareness and household penetration still lag behind some major competitors. If they can capture even a small slice of that untapped market, we're talking a potential revenue increase of, well, let's just say it could be massive.
Wow. That puts things into perspective.
Mhm.
It's like they've only just begun to tap into their full potential.
Right.
Now, what about the OG Corona Extra?
Mm-hmm.
I feel like I'm seeing more ads for it these days.
You're right. They've been ramping up their marketing, especially around big events like the World Series,
Okay.
and it seems to be working. While depletions dipped slightly, about 1%, their dollar share actually increased.
Wait, hold on. Depletions down, but dollar share up. How does that work?
It means they might be selling a tad less beer overall,
Okay.
but they're getting more bang for their buck.
Okay.
Think higher prices,
Yeah.
maybe some strategic shifts in their product mix. They're essentially making more money from each sale.
That makes sense.
Yeah,
It's not just about how much you sell, but also how much you make from what you sell.
right.
Okay. So we got the big names covered. What about those under-the-radar brands? Any surprises there?
Pacifico is the one to watch.
Okay.
It's been quietly building momentum, and this quarter it exploded, with depletions surging nearly 20%. That's not a surge, that's a tsunami.
Whoa. 20%. I'm impressed.
It's already a top brand in Southern California, and they're cleverly expanding it nationwide.
Really?
They're using a similar playbook to what they did with Modelo Especial. Slowly build awareness and then strategically flood the market.
Smart move. Speaking of smart moves, I've noticed Constellation Brands seems to be resonating with younger drinkers.
Yeah, They are absolutely crushing it with the 21 to 24-year-old demographic.
Wow.
They're pulling in a way bigger chunk of sales from this group than the overall beer category.
That's huge.
Yeah,
Younger consumers are notoriously fickle, so that's a good sign for the long-term health of their brands.
absolutely. Not only are younger drinkers buying their brands, but they're also visiting stores more frequently and spending more on each trip. They're clearly becoming loyal fans.
All right, so beer is booming. But what about wine and spirits? I feel like I've been hearing mixed things about that part of their business.
Yeah, it's a different story there. Sales are down, and a lot of that has to do with the overall weakness in the wine category, especially those lower priced wines.
So people are trading down to cheaper beers, but not cheaper wines.
Yeah.
That's interesting.
It is, isn't it?
Yeah.
And it's not just consumer behavior. Retailers are also being more cautious with their inventory.
Ah.
They're not stopping up on wine like they used to, which is putting further pressure on sales. It's called retailer inventory destocking,
Right.
and it's adding to Constellation's woes.
So it's like a double whammy for their wine business. Are there any bright spots, any silver linings?
Absolutely. Their fine wine portfolio is actually doing quite well, seeing a 6% increase in depletions.
Okay.
Big names like Maomi and Kim Crawford are leading the charge, both up over 7%.
Okay, so it seems that premiumization trend we've been seeing is alive and well in the wine world too. People are willing to spend more on higher quality, especially for those special occasions.
Exactly. And Constellation Brands is making strategic moves to capitalize on this. They recently divested the SVAAKA vodka brand,
Right.
which was more of a mainstream offering. This suggests they're doubling down on higher-end craft spirits, which saw a 9% depletion increase.
So they're streamlining their portfolio, focusing on the stars,
Right.
and ditching the dead weight.
Precisely. It's all about adapting to the evolving market
Yeah.
and catering to those shifting consumer preferences.
Okay, we've covered a lot of ground here. Beer, wine, spirits. But let's not forget the elephant in the room, the economy. Things are a bit rocky out there. How is Constellation Brands navigating these choppy waters?
They're taking a cautiously optimistic approach. They acknowledge the economic headwinds,
Right.
the fact that people are watching their wallets more closely,
Yeah.
and that there's a definite shift toward more value-seeking behavior.
Makes sense.
Yeah.
Everyone's looking for a deal these days.
Right. But here's the key takeaway. They're not just sitting back and waiting for the storm to pass. They're being proactive. They're increasing their marketing investments, focusing on those core brands that are performing well,
Right.
and constantly refining their wine and spirit strategy.
So they're not just reacting, they're anticipating and adapting.
Exactly. But it's not all smooth sailing. They're also facing uncertainty surrounding potential new tariff policies.
Ah, tariffs. The gift that keeps on giving, or in this case, potentially taking away.
Exactly. It's a major wild card that could significantly impact their business, especially their imported beer brands.
Right. So what's the bottom line here?
Well,
They're facing challenges, but they're not backing down. They're adapting, innovating, and laser-focused on those key brands and their core consumer base.
that's exactly what you want to see from a company in this kind of environment.
Yeah.
Now, before we move on to their financials, I think it's worth highlighting their approach to capital allocation, basically how they're managing their money.
Okay, let's talk money. Everyone's favorite topic. So how are they doing on that front?
Well, they're being very disciplined with their cash flow.
Okay.
They're maintaining a net leverage ratio, a measure of their debt,
Right.
below their target,
Okay.
which is a positive sign of financial stability.
So they're not over-leveraged. They're keeping their debt under control.
Yeah.
That's reassuring, especially in a volatile market like this.
Absolutely. And they're not hoarding all that cash either.
Okay.
They're returning a significant amount to shareholders
Right.
through dividends and share repurchases.
Dividends are always nice, and share repurchases can signal that a company believes its stock is undervalued.
Exactly. And they're taking a smart approach to their brewery expansion plans,
Okay.
using an agile modular approach, meaning they can adjust based on market conditions. It's like having an adjustable wrench instead of a fixed size one.
Okay.
You can tackle a wider range of challenges without overspending.
So flexibility is key.
Right.
And they're keeping their options open, ready to adapt to whatever the market throws their way.
Precisely. It's a sign of smart strategic management in uncertain times.
All right, so we've covered a lot of ground, from beer to wine, spirits, and even the economy. Now, before we wrap up part one of this deep dive,
Okay.
I have a burning question for you.
Okay, hit me with it.
If you were a financial daredevil,
Right.
what outrageous but plausible trade idea
Okay.
would you pitch based on what we've learned about Constellation Brands today?
Now, this is where the disclaimer comes in loud and clear. I am not a financial advisor, and this is not financial advice.
Of course, of course.
But if you're looking for a bold move,
Yeah?
I'd say short the lower end of the wine market and go long on craft tequila.
Whoa, hold on. Short wine and go long tequila. That's a spicy take. Talk me through it.
Think about it. Constellation Brands dumping SVT shows they're all in on premiumization. They're ditching those mass market brands and putting all their chips on higher end offerings.
Okay, so they're riding that drink less but drink better wave we've been seeing.
Exactly.
Yeah.
And tequila, especially the craft stuff, is booming right now. It's the darling of the spirits world, especially among those younger drinkers we talked about.
So this trade is a bet on those evolving tastes and the potential for big gains in a high-growth market.
Precisely. Of course, any investment carries risk, so do your own research before making any decisions.
Of course.
But if you're looking for a play that aligns with broader industry trends, this one might be worth considering.
All right, folks, there you have it. Talk Ticker's take on Constellation Brands Q3 earnings. They're riding the waves, making strategic moves, and playing the long game.
And if you're feeling adventurous, maybe dip your toes into that tequila play.
But remember, this is not financial advice.
Absolutely not.
Always do your own research and talk to a financial professional before making any investment decisions. We'll be back soon with part 2 of this deep dive, where we'll break down their financials even further. Stay tuned.
Stay tuned. Welcome back to Talk Tickers.
All right.
Let's take a closer look at Constellation Brands' beer business.
Right.
In Q3, depletions grew 3.2%, outpacing the overall market.
That's impressive, given the current economic climate.
It is.
Are they just stealing market share, or is the whole beer market growing?
Well, it's a bit of both.
Okay.
The beer market is showing some resilience, and Constellation is definitely taking share from competitors.
Mm-hmm.
What's interesting is that this growth actually accelerated from the previous quarter.
So they're gaining momentum even as the economy sputters.
Exactly. However, shipments only increased by 1.6% due to planned maintenance at their breweries.
Right.
Remember that pit stop analogy? Sometimes you have to slow down to speed up later.
Right. A short-term disruption for long-term efficiency.
Right.
But does that gap between depletions and shipments mean they're running low on inventory?
They haven't signaled any major inventory issues yet,
Okay.
but it's something to watch.
Okay.
If that gap keeps widening, it could signal trouble down the line.
Good point.
Yeah.
Now, let's talk numbers.
Okay.
Their beer business saw net sales increase 3% and operating income rise 2% during Q3. Solid, but not earth-shattering.
Right.
What drove these results?
Well, they implemented some strategic price increases in the fall,
Okay.
which added about 2% to net sales growth.
Okay.
It seems consumers are willing to absorb those price hikes, at least for now.
That's a delicate balancing act.
It is.
Raise prices too much, and you risk losing customers to cheaper competitors.
Absolutely. It's a tightrope walk.
Yeah.
They're also laser focused on efficiency.
Okay.
Squeezing out another $40 million in cost savings this quarter.
Wow.
Think about it. That's like finding a hidden stash of cash to offset those inflationary pressures.
That's a nice little bonus. Every penny counts these days.
Every penny counts.
And they're putting some of that money back into marketing, right?
They are. They're spending more to make sure their brands stay top of mind in this competitive environment.
Makes sense.
Now, let's zoom in on individual brand performance, starting with the star of the show, Modelo Especial.
Okay. Modelo Especial.
Reigning champion.
The reigning champion. What's the secret sauce?
It's a combination of factors.
Okay.
First, there's still room to grow.
Okay.
Imagine walking into a bar and finding only half the taps are pouring Modelo.
Right.
There's still so much untapped potential for this brand.
So they're not just relying on their existing fans, they're actively reaching new customers.
Right.
Mm.
Plus, they have a strong brand identity, authentic marketing, and a loyal following.
Yeah.
And of course, it helps that it's a darn good beer.
Okay. Modelo is a clear winner.
Uh-huh.
What about Corona Extra?
Yeah.
They've been pushing it hard with all those World Series ads.
And those ads seem to be resonating. While depletions dipped slightly, about 1%, their dollar share actually increased.
Right.
They're selling a little less, but making more money on each sale.
So they're making strategic choices about pricing and product mix. I mean, pushing those higher margin Corona products.
Smart move.
Yeah.
It's about maximizing profitability, not just chasing volume.
Now let's talk about the underdog, Pacifico.
Okay.
It seems like it's having a moment.
Pacifico is on fire.
Yeah.
Depletions surged nearly 20% this quarter.
Wow.
It's already a major player,
Okay.
ranking as the number $4 share gainer across all beer brands.
Wow. That's impressive.
It is.
I remember when Pacifico was that niche brand you'd only find in certain parts of the country.
Well, they've expanded strategically,
Okay.
focusing on key markets and building a loyal following.
Mm-hmm.
It's a textbook example of how to take a regional brand national.
And they're using that same slow and steady approach they use with Modelo, right?
Exactly. They're not rushing it.
Okay.
They're patiently building awareness and then capitalizing on that momentum.
Smart strategy.
It is.
Now, what about the chelada category? It's a bit of a niche market, but it's been growing steadily.
Yeah, Modelo Chelada saw a decent 4% increase in depletions,
Okay.
but it's facing some headwinds from the convenience store channel,
Okay.
where those large single-serve cans have traditionally been strong.
I can see how that would be a challenge.
Yeah.
People are buying less on impulse these days.
Right.
Yeah.
But Constellation isn't just sitting back.
Right.
They're diversifying, offering 12-pack formats to appeal to a broader range of consumers and occasions.
So they're adapting to those changing consumer habits.
Exactly. It's all about being flexible and meeting the consumer where they are.
Right. Right.
Now, before we move on to wine and spirits, there's one more thing I want to highlight.
But
Constellation's remarkable success with younger drinkers.
yeah, we touched on that earlier. They're really winning over those 21 to 24-year-olds.
Right.
What's the key to their success with this fickle demographic?
It's a combination of factors.
Okay.
Strong branding, authentic marketing, and a product portfolio that aligns with their tastes. And it's not just that they're buying these brands.
Right.
They're visiting stores more often and spending more each time.
That is a strong indicator of brand loyalty.
Is.
They're not just experimenting, they're becoming repeat customers.
Exactly. And that bodes well for Constellation's long-term growth.
Yeah.
Now, let's shift gears and talk about their wine and spirits business.
Okay.
This segment has been facing some persistent challenges.
Yeah, it seems like a different story there.
It is.
Sales are down, and I've heard whispers about retailers being hesitant to stock up on wine.
You're right. Net sales declined by over 14% in Q3.
Wow.
Largely due to a 16% drop in shipment volume.
Okay.
This is partly driven by ongoing weakness in the overall wine category, especially at the lower price points.
So that premiumization trend we've been seeing in beer is playing out in reverse in the wine market.
Yeah.
Consumers are trading down to cheaper beers, but not to cheaper wines.
It's a curious dynamic.
It is.
Consumers seem to be more discerning about their wine choices. And the lower price segment is taking a hit.
Okay.
Plus, retailers are being cautious with their inventory orders,
Right.
adding another layer of pressure on Constellation's wine business.
So it's like a perfect storm of challenges for their wine segment.
Yeah,
Are there any bright spots at all?
there are. Their fine wine portfolio defied the trend, achieving a 6% increase in depletions.
Okay.
Flagship brands like Meiomi and Kim Crawford are doing particularly well,
Okay.
both exceeding 7% depletion growth.
So those higher-end wines are bucking the trend. Seems people are still willing to splurge on those special occasion bottles.
Absolutely. And Constellation is laser focused on this premium segment, constantly innovating and expanding their offerings to cater to this demand for quality.
That's a smart move considering the headwinds they're facing in the lower price segment.
It is. They're also making strategic divestitures to streamline their portfolio,
Okay.
like the recent sale of the SVEDK vodka brand.
Right.
This signals a clear commitment to premiumization, shedding their mainstream brands and focusing on higher-end offerings.
So they're doubling down on that drink less but drink better trend across the board.
Exactly. And it's not just limited to wine.
Okay.
They're seeing strong growth in their craft spirits portfolio as well, with depletions up 9%.
It's clear they're adapting to changing consumer tastes and focusing on the segments with the most growth potential.
Right. But despite those bright spots, their wine and spirits business still recorded a $32 million decline in operating income during Q3, resulting in an operating margin of 22.1%.
That's a tough pill to swallow.
It is.
What are the main factors behind this decline?
The primary driver is the overall decrease in shipment volume.
Right.
Lower sales mean lower profits. Simple as that.
Yeah.
Plus, they're investing heavily in marketing to support their premium brands, which also impacts their margins in the short term.
So they're taking a long-term view,
Yeah.
investing for future growth, even as they navigate these short-term challenges.
That's the key takeaway. They're playing the long game.
Okay.
Now let's zoom out and talk about the company's overall financial health.
Right.
During Q3, Constellation Brands generated $1.6 billion in free cash flow,
Okay.
a 13% jump year over year.
That's a healthy increase.
It is.
What are they doing with all that cash?
They're sticking to their capital allocation strategy,
Right.
which prioritizes a strong balance sheet,
Right.
returning cash to shareholders,
Yeah.
and investing in future growth.
So they're not putting all their eggs in one basket. It's a balanced approach.
Exactly. They've maintained a net leverage ratio below their target,
Okay.
demonstrating their commitment to financial prudence,
Mhm.
and they're rewarding shareholders,
Okay.
returning over $1.2 billion through dividends and share repurchases through November of 2024.
So they're sharing the wealth with investors while also investing in future growth.
They're continuing to invest in brewery expansions,
Okay.
but with an agile, modular approach that allows them to adjust to market conditions.
So flexibility is built into their plans.
Right.
They're not overcommitting in case demand doesn't meet expectations.
Smart move.
Yeah.
They still plan to deploy approximately $3 billion in capital expenditures between fiscal years 2025 and 2028.
So they're clearly bullish on the long-term prospects of their beer business.
Absolutely. Now, the big question is, what will they do with all the cash they're generating as these expansion projects wind down?
Will they reinvest in the business, make acquisitions, buy back more shares, increase those dividends?
Those are all good questions.
Yeah.
Based on their recent actions and comments during the earnings call, it seems they're leaning towards returning more capital to shareholders in the coming years.
So more dividends and share buybacks could be on the horizon.
Potentially.
That's something for investors to watch closely. Now, let's talk about some of the external factors that could impact Constellation Brands' performance in the coming quarters and years.
Okay.
We've already touched on the uncertain economic environment and the potential for new tariffs.
Right.
Those are two big wild cards.
They are.
But what about competition?
Yeah.
It seems like the beverage landscape is constantly changing.
You're right. The competitive landscape is constantly evolving.
Yeah.
New brands are emerging, and existing players are innovating and fighting for market share.
Right.
Constellation can't afford to get complacent.
So they need to stay agile and keep those innovative juices flowing.
Absolutely.
And they need to keep a close eye on the regulatory landscape.
Right.
New regulations or taxes targeting the alcohol industry could pop up at any time.
Absolutely.
So it's not just about selling drinks, it's about understanding the political and regulatory game as well.
Exactly. It's a complex industry with lots of moving parts.
Yeah.
Now, let's look at some long-term trends that could shape Constellation Brands' future.
Great.
We've already talked about premiumization,
Right.
which seems to be a driving force across all their categories.
Consumers are increasingly willing to pay a premium for higher quality products. It's a trend we're seeing across many industries, not just beverages.
Right, and Constellation is well positioned to capitalize on this with their strong portfolio of premium brands. But what about health and wellness? Is that a threat to the alcohol industry?
It's definitely something to watch.
It is.
Consumers are more health conscious than ever.
Right.
Could we see a decline in alcohol sales overall?
I think it's more likely we'll see a shift in preferences
Okay.
towards lower alcohol options, like hard seltzers and non-alcoholic beers.
And Constellation's already making moves in this space, right?
They are. They've launched successful hard seltzer brands
Right.
and are expanding their non-alcoholic beer portfolio.
Okay.
They're anticipating and adapting to those shifting consumer tastes.
Smart move. It's not just about following trends. It's about anticipating them.
Right.
What about e-commerce?
Yeah.
How is Constellation adapting to the digital world?
They're investing heavily in their digital capabilities,
Right.
expanding their online presence, partnering with key retailers,
Okay.
and developing their own direct-to-consumer platforms.
So they're embracing the omni-channel approach, reaching consumers wherever they are, whether it's in stores or online.
Exactly.
Another trend they're embracing is sustainability.
Right.
Consumers are definitely more eco-conscious than ever before. How is Constellation responding to this demand for sustainable products?
They've made commitments to reduce their environmental footprint.
Okay.
They're investing in renewable energy, reducing water usage,
Okay.
and implementing sustainable packaging practices.
So they're trying to walk the walk, not just talk the talk.
They are, and they're being transparent about their efforts.
Yeah.
Which is key to building trust with consumers.
Now, let's talk about another major trend. The rise of craft and artisanal products.
Right.
Consumers are increasingly drawn to unique, high-quality offerings with a story behind them.
They're looking for authenticity and something that stands out from the mass-produced brands.
And Constellation is tapping into this trend by acquiring and developing a portfolio of craft and artisanal brands, right?
Absolutely. They have a strong presence in the craft beer space and are expanding their offerings in craft spirits and wine.
So they're catering to a wide range of consumers,
Right.
from value seekers to those looking for something truly special.
Precisely.
Now, let's shift gears and talk about the key takeaways for investors.
Okay.
What should they be watching for in the coming quarters and years?
Right.
What are the key factors that could make or break Constellation Brands' success?
Well, the overall economic environment is always a factor.
Right.
A recession could dampen consumer spending,
Right.
impacting Constellation sales.
So the macro picture is something investors need to keep an eye on.
Absolutely. They also need to monitor the competitive landscape. New challengers are emerging all the time,
Right.
and Constellation needs to stay nimble and innovative to maintain its market share.
And what about their capital allocation strategy? It seems like they're leaning towards returning more cash to shareholders.
Yeah.
But will that continue?
That's a key question for investors.
Right.
Will they stick with dividends and buybacks, or will they shift their focus to M&A or other growth initiatives?
It's a fascinating time for Constellation Brands.
It is.
They're facing challenges, but are also well-positioned for future growth. Investors need to stay informed and do their homework.
Absolutely.
Now, before we move on to our This Is Not Financial Advice segment,
Okay.
let's revisit some key trends that emerged from Constellation Brands' Q3 performance.
All right.
Let's recap the highlights and lowlights.
Their beer business continues to outperform the market, fueled by brands like Modelo Especial and Pacifico,
Right.
but they're facing headwinds from rising costs, increased competition, and those temporary brewery maintenance disruptions.
Right.
Their wine and spirits business had a tougher quarter,
Yeah.
grappling with weakness in the lower-priced wine segment and that ongoing retailer inventory destocking.
Right.
But there were bright spots, too.
Okay.
Their fine wine portfolio performed well, and they're seeing strong growth in their craft spirits offerings.
Okay.
They're also taking decisive action to reposition their wine and spirits business for future growth,
Right.
focusing on premiumization and making strategic divestitures.
They're adapting to a changing market, investing in their key brands,
Right.
and returning cash to shareholders while navigating a challenging economic environment and a fiercely competitive landscape.
Absolutely.
Overall, it was a mixed bag, but they're still a solid company with a bright future.
Yeah, I agree.
Now, are you ready to unveil your outrageous trade idea?
I am, but first, the standard disclaimer, I am not a financial advisor, and this is not financial advice.
Got it.
Always do your own research and consult with a professional before making any investment decisions.
Got it. Now let's hear it.
Okay.
What's this bold trade idea?
Short Anheuser-Busch InBev, ticker symbol BED,
Okay.
and go long Diageo, ticker symbol DEO.
Whoa, hold on. Short the king of beers and go long the maker of Johnny Walker and Guinness?
Right.
That's a contrarian play if I've ever heard one.
It is, but hear me out.
Okay.
Anheuser-Busch InBev is heavily exposed to the mass market beer segment,
Right.
which is facing serious pressure from premiumization, the rise of craft beer,
Right.
and evolving consumer preferences.
So you're betting that their core business will continue to decline.
That's part of it.
Okay.
They're also heavily reliant on the U.S. market,
Right.
which is becoming increasingly competitive and saturated.
Mm-hmm.
They're facing headwinds on multiple fronts.
But not a great outlook for the king of beers.
Not particularly.
Now, what about Diageo? Why are you so bullish on them?
Diageo has a much more diversified portfolio
Okay.
with a strong presence in premium spirits, craft beer,
Okay.
and even non-alcoholic beverages.
So they're better positioned to adapt to those shifting consumer tastes we talked about.
Exactly. And they have a truly global footprint,
Okay.
which gives them more growth opportunities than Anheuser-Busch InBev.
Right.
They're simply more agile and diversified.
So you're essentially betting that Diageo is better equipped to navigate the evolving alcohol landscape.
Precisely.
Hmm.
Of course, any investment carries risk,
Of course.
but this trade aligns with broader industry trends.
All right, folks, there you have it. Our outrageous but plausible trade idea.
Mm-hmm.
Short Anheuser-Busch InBev and go long Diageo.
Remember, this is not financial advice.
Always do your own research and consult with a professional before making any investment decisions.
Absolutely.
Now let's move on to Constellation Brands' wine and spirits business and see if we can uncover any hidden gems or potential pitfalls. Welcome back to Talk Tickers. Let's dive back into Constellation Brands and dissect their wine and spirits performance. This segment has been facing some headwinds, but maybe we can uncover a hidden gem or two.
It's definitely been a tougher road for their wine and spirits business, especially with those lower-priced wines struggling.
Right, it seems like people are more willing to trade down to cheaper beers than cheaper wines. What's driving that trend?
It's a combination of factors. Think about it. Beer is often seen as a more casual, everyday drink. So when people are looking to cut costs, they might switch from a premium beer to a more affordable one.
But with wine, maybe there's a perception that you get what you pay for.
Exactly. Plus, wine often has a higher price point to begin with, so that trade-down effect might not be as pronounced.
Interesting. So where does Constellation go from here with their wine and spirit strategy?
Well, they're doubling down on premiumization. Focusing on those higher-end brands that are resonating with consumers, they're also streamlining their portfolio, shedding those underperforming brands, like Svieti vodka.
So it's a two-pronged approach. Elevate the premium and cut the dead weight.
Exactly. They're adapting to the evolving market and betting on those segments with the most growth potential.
Okay, so let's talk specifics. Which brands are standing out in their wine and spirits portfolio?
Their fine wine portfolio is a bright spot, with depletions up 6%.
Okay.
Names like Meiomi and Kim Crawford are doing exceptionally well, both seeing depletions grow over 7%.
So those premium special occasion wines are still in demand.
Absolutely. People are willing to splurge on quality, especially when it comes to celebrating those special moments.
Makes sense. Now, what about spirits? Are there any winners emerging there?
Their craft spirits portfolio is seeing strong momentum,
Okay.
with depletions up 9%. This suggests their strategy of focusing on higher-end artisanal offerings is paying off.
So that trend towards craft and authenticity we've been seeing in beer is also taking hold in the spirits world.
Exactly. Consumers are looking for unique, high-quality products with a story behind them.
Okay, so Constellation's making smart moves, but they're still facing challenges. Their wine and spirits business recorded a $32 million decline in operating income during Q3, resulting in an operating margin of 22.1%.
Right. That decline in operating income is largely due to the drop in shipment volume. Lower sales translate to lower profit, simple as that.
Yeah.
And they're also investing heavily in marketing to support their premium brands, which impacts their margins in the short term.
So they're playing the long game, investing for future growth, even as they navigate those short-term challenges.
Exactly.
Okay, so we've covered a lot of ground here. Let's shift gears and move to our final segment, the This Is Not Financial Advice Corner. But before we get to our outrageous trade idea, let's recap some key takeaways from Constellation Brands' overall performance.
Okay. They beat on earnings per share, but missed on revenue, which sent the stock tumbling over 17%. However, their free cash flow remains strong, suggesting the underlying business might be healthier than those headline numbers indicate.
Right. It's a tug-of-war between short-term concerns and long-term potential.
Exactly. It's crucial to look beyond the surface and consider the full picture when evaluating a company's performance.
Now, let's have some fun.
Okay.
What's your outrageous but plausible trade idea based on what we've learned about Constellation Brands?
Okay, remember, this is purely hypothetical and for entertainment purposes only. We are not financial advisors, and this is not financial advice.
Got it. Always do your own research and consult with a professional before making any investment decisions.
Absolutely. Now here's the pitch. Short the lower end of the wine market and go long craft tequila.
Short wine and go long tequila. That's a bold move. Explain yourself.
Think about Constellation's strategy. They're moving away from mass market brands and doubling down on premiumization. They're betting on that drink less but drink better trend, which aligns perfectly with the booming craft tequila market.
So you're shorting the segment Constellation is moving away from and going long on a category they're embracing.
Precisely. It's a contrarian play that bets on the evolving tastes of consumers and the potential for big returns in a high-growth segment.
It's definitely an interesting idea.
Yeah.
Of course, any investment carries risks, so do your due diligence.
Right. The lower end of the wine market could surprise everyone and make a comeback, or craft tequila could face unexpected challenges.
There are always unknowns. That's why it's so important to do your research and never invest more than you can afford to lose.
Absolutely.
So there you have it, folks. Our outrageous but plausible trade idea inspired by Constellation Brands. Short the lower end of the wine market and go long craft tequila.
But remember, this is purely hypothetical. We're just trying to spark your thinking and encourage you to explore different investment angles.
And with that, we wrap up our deep dive into Constellation Brands. They're facing challenges, but they're also adapting and innovating to stay ahead of the curve.
It'll be interesting to see how they navigate the coming quarters and what strategic moves they make next.
Thanks for joining us on this Talk Ticker Deep Dive. We'll be back soon with another earnings call breakdown and another outrageous but plausible trade idea.
Until then, happy investing.